Hi everyone, Happy New Year! I'm previewing the week ahead in markets and putting a particular emphasis on what the Democrats taking control of the Senate, as well as Joe Biden becoming president, means for gold and the US dollar, while also running down this week's economic calendar. GKFX Cambodia presents the week ahead. So I'll get into gold and the dollar in just a moment, but let's take a moment to understand the US system of government and why what happened last week is important. The idea in America is to ensure a separation of powers at the federal or national level. So there are three branches: the legislative, the executive, and the judicial. Democrats now control the executive, i.e. the presidency, and the legislative branch, including the House and Senate, giving them almost complete control. By the way, if you're getting some use from this video for your trading, please click that like button and the YouTube algorithm will make sure more people see it and we can keep making them. Let's divert quickly to the economic calendar. This week there are a couple of major releases from the United States, but it's really all about China. We start on Monday with Chinese CPI and PPI. There is not much of note on Tuesday. Wednesday, there is US CPI and the Fed's Beige Book. On Thursday, there is China's trade balance and US retail sales. Friday is a busy one with China Q4 GDP as well as Chinese industrial production and retail sales. And lastly, UK industrial production. So here's the general idea, guys. If Democrats control the executive and legislative branches of US government, the amount of fiscal stimulus is likely to be much bigger. Democrats lean to the left and believe in bigger government with higher taxes and higher spending. Congress just agreed a second stimulus bill for around $900 billion, but another even bigger one, perhaps in the trillions, now seems to be a lot more likely. We have just had a big economic shock from the COVID pandemic, and we are still going through it. Government increasing spending offers some extra demand to offset some of the lost demand from businesses closing and people losing their jobs. The interpretation then is that in the short term, this government spending is good for economic growth and good for assets that benefit from strong growth. In currencies, that means the Aussie and the Kiwi dollar, as well as the pound and the euro. The dollar is the foremost haven currency, but people will not need a haven if economic growth is expected to rise. Now, here's the biggest point for gold. If growth does start to pick up, all the extra dollars that have been printed by the Federal Reserve will add to inflation, and gold is an inflation hedge. The biggest risk to this positive outlook for gold from the Democrats taking control of Congress is that the Fed decides to tighten policy. But they have said they are keeping interest rates at zero for 2 years, which means there is no opportunity cost to holding gold that doesn't earn any interest. The second risk is that the economic growth never materializes after the government spending. But if that's the case, the Federal Reserve would probably keep interest rates low, which again serves to prop up gold. Right. Thanks everyone, good luck trading this week, and make sure to subscribe to our channel so you don't miss the next video.